Hey, what's up guys? Omar here, broker and CEO of Alden Mortgage and Ome Realty. So this is going to be a mortgage rate update. And then a question I just got asked is what happens, because God knows that real estate is taking a big dump. Everybody is completely, like, businesses are going out of, mortgage companies are going out of business. Services are going out of business. What happens if the people that are servicing my loan go out of business? Do I still pay for my mortgage? Now, I don't know why in the media people listen to a lot of the things where they say, oh, real estate is doing good, real estate is doing bad, real estate, let's say, as a whole, real estate sucks. This is what's called the peak of the market. This is at the top. Real estate prices are at the most expensive. Rates are at the highest it's been since the Volcker shock. Back in the late 70s when we were post the Vietnam War, and then Volcker was like, hey, you know what, we're going to go ahead and increase rates because we have to go ahead and counter hyperinflation, and that's what they're trying to get in front of right now. Now we have another Fed fund rate that's going to be happening here next week on the 20th, 21st. It is going to be it's going to be rough. Now, a year ago, I stated that we're probably going to be in the 7% range, and it looks like we are. You know, there's some companies already teetering that 7% mark. What will happen to real estate as a whole when we get to that 7% mark? That's going to be something that's going to be seen in a way that I don't think we've ever seen before. But let's get on with the mortgage rate update. As of 9/19/2022, 30-year fix will be sitting at 5.58%. 15-year fix will be sitting at 4.74%. 30-year high balance will be sitting at 5.71%. DSCR loan, which is called a debt service cover ratio loan. This is a loan product for those people who trying to get into the investment world. They want to go ahead and use the income that they have coming in from the rental income to go ahead and qualify them for the property. This usually is something between 5, 6, 7 total units and or above. You're going to go ahead and use a DSCR loan. Bank statement loan, this is another one of those non-qualified, non-agency loan. If you go ahead and use your bank statements to go ahead and qualify you because you don't have any W-2s, you don't have any pay stubs or anything like that, we're going to go ahead and qualify you based off of your bank statements. That'll be sitting at 8.12%. FHA 30-year fix will be sitting at 4.98%. 7/6 adjustable rate mortgage will be sitting at 5.64%. USDA, which is one of those zero down payment programs, that'll be sitting at 4.95%. VA 30-year fix will be sitting at 4.98%, and then hard money fix and flip will be sitting at 9.75%. You see a distressed property that is going to be something that you think you could go ahead and make a pretty penny on. Hard money, fix and flip. It's a short-term loan. It's a little bit on the higher side, but you could always go ahead and purchase that. Now, the requirements on a fix and flip, 85% loan to value. You just have to bring 15% to the table. We'll go ahead and cover 100% of the rehab costs, and then there you go. For up to 50% commission rebate, 0% listing on selling your current home or any of these mortgage products, link in the description below now that we got that shameless plug out of the way. So, your mortgaging servicer goes out of business. Mortgaging companies are going completely belly up. It's been going on now for the past year, because let's just face it, everybody was hiring like crazy just not too long ago, and now all of a sudden it ain't the business that we were in. Compass is letting people go, Redfin is letting people go, Better.com, that was one of those big fiascos that we're having. They let a bunch of people go off of a Zoom call. All your big banks are doing it, JP Morgan Chase, Wells Fargo. Everybody is laying people off because, let's just face it, we're bored. We have nothing else to do. The only thing that we can do is we could go ahead and try to buy out triggered leads. Now, triggered leads, if you don't know what a triggered lead is that if you go ahead and decide that you want to go ahead and purchase a mortgage, make sure you don't want guys like me calling you, because we rely heavily on triggered leads right now. Well, not anymore, because they're asking so much money to buy triggered leads. It's like $20,000 a month to go ahead and buy triggered leads. So what happens is TransUnion sells your leads as soon as you pull a mortgage application, because we know what the application is for. If you pull an application for a car, if you pull an application for credit, if you pull an application for a mortgage companies are told, hey, this person is shopping around for mortgages. So then what we do is we're called rate pirates, right? We go ahead and beat rates. We see what the next person is offering, and we try to go ahead and save you a little bit of money. If we can, go ahead and steal that business and bring it on our way, and that is what's called a triggered lead. They're asking a ton, because that's what people are resorting to. They're trying to, instead of going the direct avenue of trying to, make relationships with real estate agents, going to conventions, doing this, insurance companies, instead of establishing relationships like that, what they're doing is what we're all doing, is we're go ahead and doing trigger lays. And if you are going to go ahead and not want guys like me to call, make sure you tell the person that is doing your loan, if it isn't me, to go ahead and change the phone number. You're still probably going to get a call, but it won't be as bad as it would be if you put your phone number, your actual phone number, on your 1003 application, your 34 file. The loan originator that's doing your loan will know what a 34 file is. But as far as doing your loan, the servicing part of your loan, if the mortgaging company goes out of business, are you free and clear? Are you scot-free? Can you just say, I'm done, I'm out, can I go ahead and be on my merry way? I don't have to pay anything else on this property, because who am I paying for? Well, yeah, it's called still insured by the FDIC, right? The federal department, insurance, they're going to be they're still going to go ahead and require you to pay for the payments, because what's going to end up happening is that person, that servicer that's going to go belly up, they're going to have to sell all the servicing to another company, regardless if they want to or they don't want to. It's going to go ahead and send it someplace else. Now, you'll notice that every time you do your mortgaging application, or you have a mortgage currently, sometimes you'll sit there and you'll be like, hey, I thought I did my mortgage with Wells Fargo. What's going on here? Who's this Mr. Cooper, or who's this whatever other mortgaging servicing company, who's Phoenix Funding, or whatever the name might be, right? Well, that's what happens. They'll sell one mortgage product, like they'll sell a big block of mortgages over to another servicer. They'll go ahead and make some money off it. Then they'll go ahead and dump it onto somebody else. Then they'll send it, and that'll trickle down the line. At the beginning, because interest is the biggest part in the beginning, the first 15 years, that's how much money you make in the very, very beginning. They're going to be servicing, they're going to be selling it as much as they can, because they want to go ahead and make that money. They'll hold that debt on their books just so they can make the money on their interest for like that 2, 3, 4, 5 years. And then after they make their money, they'll go ahead and sell it off to somebody else. They'll go ahead and sell it off to somebody else. So the mortgaging company, if they go belly up, you still make your mortgage payments to that servicer. You have to call that servicer if you want to go ahead and know exactly who the new servicer is going to be, or you could go to, if it's a Fannie Mae or Freddie Mac product, you could just go on their website, you could see exactly who the new servicer is. But they should give you a notice in mail that tells you, okay, now going from, I don't know, we're in September, going from October forward, you're going to have to go ahead and make your mortgage payments to this person. But don't listen to the media. Real estate sucks. Don't buy right now. I know I'm not supposed to say that because I'm a mortgage broker and that's my bread and butter. That's what I'm supposed to do. But it's really, really at the peak. Well, if you like the content, like, subscribe, comment. For up to 50% commission rebate, 0% listing on selling your current home, or any mortgaging assistance down there. We do all types of stuff. We do 100% financing. We do up to $20,000 commission rebate. Who does that? Nobody does that. 50% commission rebate on some of them. We've actually gotten as high as $50,000 on a commission rebate. Until next video, guys, I really appreciate your watching. Peace. I want to do a 3.2 million. Money is in it. I don't want to think about it.